Trade Ideas, what is up? First things first, giving some free t-shirts out. All right, guys, let's all have some fun right here. First thing I want to talk about in this presentation today is how to predict the stock market. Now, I'd like to trade stocks anywhere between 25 cents and $25. So I'm a day trader, and on top of that, I am going off a lot of penny stocks. Now, some people have different opinions about penny stocks, if they like them, if they hate them. What you guys really have to focus on is that they are predictable. And I do want to get into a couple strategies on a psychological level, talking about how they can be predictable. So a little bit about me starting off. I'm the founder and I'm the lead trader at DekmarTrades.com. I've mentored over 2,000 traders internationally. I primarily focus on trading psychology, which is what we're going to dive into today. I work a lot with technical analysis, and so far in 2017, I have a 73% win rate. So statistically speaking, I win 7 out of 10 times. All those, 2 out of 3, or the 2 times I do lose, or 3 times I do lose out of my 10, I'm cutting those losses very quickly, and I'm letting my big gains run. That's how you guys want to be profitable. That's how you want to be consistent. Cut your losses quick. And that's something that people just don't understand that they won't do. It's all about letting your big gains run, not holding the bag, and just playing smart trades. So going off a lot of this, how can you predict the stock market, guys? How can you become a consistent stock trader and say to yourself, hey, how am I going to know this stock is going to break out? How is this stock going to get on nice big rips before, it gets oversaturated and starts coming back on down? So what you want to say to yourself every single morning is not what am I doing today? It's what is everyone else doing today? Because it doesn't matter what I'm doing today. If I'm going on a stock, let's say EBIO, if I get on EBIO and it's just me, then it's not going to move at all. Why do stocks move up and down? Stocks move up and down because people are buying them or they're selling them. If I'm the only one playing a stock, that's not going to matter at all. I'm going to sit there, I'm going to buy it, say, let's go, and now what? No one else is playing it. No one's touching it. So it's not going to be doing anything at all. So you want to sit down every single day and say, not what I'm doing today, what is everyone else doing today? What you see right here, 80% of traders are going to lose within their first year. That's a stat that everyone's probably heard of if you guys have ever been interested in day trading. So why? Why does 80% lose? And that 80%, if you guys have heard me speak before, you guys have heard me talk or been in my chat rooms before, 80%, I like to call them the mob. The mob is going to be that 80% that doesn't really know what's going on. There's going to be a lot of random pushes. They're just going to be chasing. They're going to be just following where the top 20% is. Now, that's where I want to put you guys. I want to put you guys in that top 20%, and I want to show you guys how you guys can be in that top 20%. You don't want to be in that 80%. You want to be in the top 20%, and when you are, you can make some very consistent profits. This was over the summer. I made $10,000 in 20 days. This was in a 20-day span. I'm only 24 years old, and bringing this in is, I'm very happy about it. I have no complaints about it. A lot of my friends are straight from college that are making 40 grand, throughout the whole entire year. Being able to make 10 grand in 20 days, it's a very satisfying feeling, and it's all from learning psychological play in the market, being in that top 20%, and avoiding that 80%. This is recently one of my trades that I just went off of. I have a $1,000 gain. $1,000, it's solid. No complaints about a $1,000 gain. But what I want you guys to take from this gain is that this was from a small account. I'm currently doing a small account challenge at DekmarTrades.com while I'm working on growing a $4,000 account, live streaming every single day, and showing you guys you can turn a $4,000 account into a 5, 10, 20, whatever you guys would like to. So this trade was one of my first big trades off my $4,000 account. And now, why is this significant? I made $1,000 off a $4,000 account. When you guys are long-term trading, when you guys are looking for an investment to do annually throughout the year, you're looking for a 20% return throughout the whole entire year. This is a 20% return in the matter of 24 hours. So when you guys are learning these strategies and you're focusing on being a day trader, you guys can come out very profitable in a very quick manner. Now, a lot of people are saying, oh, it's a gamble. It's all a risk. Not if you're willing to study. And that's the number one thing people aren't willing to do. They're not willing to study. They're not willing to put in the work. They just see numbers like this and say, okay, this guy can do it. I want to go do it. But I've been grinding for a while now, and you guys can obviously do this as well, but it's going to take time. If you want to compare stock trading to gambling, be the house, because the house always wins. So moving on. This is that last trade. The last trade I just showed you, CYCC, this is the same exact chart, the same exact pattern, and this is how I want to break down that 80%. That 80% of traders are going to lose. Where are they? Where are they in this chart? Where are the winners? Where are the losers? First off, we have the purple. The purple are the early swing traders. Next up, we have that orange, which I like to call the breakout traders. Then, as you can see, the green. The green, 70%, that's where most people are buying, and that's where most people are losing. Then on top, we get our shorters, and at the bottom, we have our small percent, around 3%, which is our dip dip buyers right there. So what I want you guys to see is that there is basically 4 areas that you guys can be in that are going to be profitable. So why is the huge majority in that 70%? Because they're letting their emotions get involved. They're saying to themselves, hey, you know what? I'm not studying a chart pattern to be in the purple. Why is people buying at the orange? Because that's breaking a $2 natural resistance line. That's when, as you can see, all the volume's starting to move on up. That's when it's starting to rip. But people who aren't willing to study and let their emotions get involved, they're buying in the green. That's 70%. And I've been a victim of this before. You see a spike go off, you get super excited, say, hey, that's where the money's at. That's where I want to be. And what do? You buy in the green, you buy at the top, and next thing you know, you're pounding around saying, why does everything I buy turn on me? Why is this stock falling? And that happens so much to everyone. And I've been there 100% as well. You guys have to learn not to be in the green. You guys have to not be in that 70% right there. You have to figure out a way to be in the purple, be in the orange, be in the red, be in the pink. Just do not be in that 70% chunk. And that's what you guys really have to understand. And that's why 80% of traders are going to lose within that first year, because they don't know how to figure out to be in that purple or that orange or that red or that pink. Now, why are people in that green? They're in the green because they are letting their emotions get involved. They're saying, hey, I see this guy making huge amounts of money on the CYCC spike. I want to hop in, without really saying, I'm chasing at this point. On this play, I was in on the purple. I was in at 179. By the time it went to the top of the spike, I was up around 50 cents on 2,000 shares. I was able to make a $1,000 profit. Why were people buying at the orange? Well, the orange is the break of $2. $2 is a natural resistance line. So when we break $2, you can see volume start coming on in. Now it's popping up on in trade idea scanners, high of the day momentum scanners, turning into a top gainer. And that's when people in the green start buying it, because they're chasing. Then the worst thing about chasing is that they're going to be holding their gains or holding their losses as it just keeps falling, falling, falling. And that's what you guys have to avoid. You guys cannot let your emotions take over. Basically, again, if you guys ever seen Talladega Nights, the great words of Ricky Bobby, if you ain't first, you're last. And that's basically how I go on that's how I go on my trading. If I'm a purple, I'm first. If I'm in even the orange, I'm good with that. Shake and bake, baby. But I am not going in the green. I'm not going to be that. And I used to be that. When I was not profiting, I was in the green. And you know why? Because of the plain fact that I was chasing these plays. So breaking down that 80%, why does that 80%, that 70% lose, within their first year? Because they're chasing. They're letting their emotions get involved. They're buying on the big bulk and not getting in early. And that's not what I want for you guys. So I always like to back up. Why did the mob move in on this play? This is what I like to call an indicator squeeze. Everything I do, it's habit of me to just show my credibility behind every single trade. Just simple enough, quick little fun fact right here. 50-day moving average, that blue line moving down, 13 EMA swooping across the bottom. We're getting a squeeze. We're getting a triangle. And that's why we start having a lot of indicators push on up, get a nice big rip, get a nice big pop. Another example of this, as you guys can see, is going to be ITUS. 50-day moving average moving across the top, 13 EMA swooping across the bottom, bada boom, we got a nice big rip. So it's very, very predictable. This stuff is going to happen over and over and over again. You guys just have to be putting in the work, and you guys will see these massive, massive rips and these massive spikes. So what I want next for you guys is to understand this. This is extremely important. Keywords to look for in hot press releases. This is going to be bringing in a lot of emotion. Now, as I said, guys, emotions is not good in day trading. It's not good at all. You want to be a wall when you trade. You want to be able to go out there and say, hey, I'm going to stick to my charts, I'm going to stick to my fundamentals, and I'm going to play smart. But at the same time, so many people are going to let emotions take over, which is why we get these giant runs and these giant rips. And that's great for me. I'm happy for it. Hey, we're going to predict where these emotions are going to go next. And wherever the emotions go, wherever that mob goes, wherever that 80% is going to go, that is where this thing is going to absolutely rip. So why are these important keywords to look for in a hot press release? Because first off, they have credibility behind them. First off, there is positive vibes, positive words from it. You can see the number one word is positive. We also have words such as approval, promising. We have words partnership, met primary endpoints. These are all positive words. So what do? How would I like to trade these? I wake up, as I said, every single morning around 7:30 a.m. We're going to have hot press releases come out at 7:30, 8 o'clock, 8:30, 9 o'clock every single day. Now, the moment you guys see a hot press release drop with one of these keywords in, you want to go ahead and go buy it. And that is extremely important, that you go ahead, go buy it right away. That's when you guys will be in the orange. So if we go back for a second, let's go back, and we see a hot press release come out, you want to be in the purple, you want to be in the orange. The fact is, we'll see, let's say, a hot press release come out with, positive phase 3 data, and then what happened? Everyone waits until it goes on that nice rip. Everyone waits till it goes on the nice pop, and then you're buying at the top already. The market opens up and just absolutely dumps on you. So these are the emotions, that 80% that people are going to lose are going to be fearing a lot. That's what they're going to be going through. These emotions at the top, we're gonna have our excitement, we're going to have a thrill, and we're gonna have euphoria. We've all been at that point where we're trading and we are just having that euphoric moment where we're just just winning, and we are completely blind to everything else. Completely blind to everything else. You're up a few $100s, a few $1,000s. Baby, grab the kids, we're going to the Olive Garden. This is the best day of my life. You want to understand, guys, that you do not want to let emotions take over because they are going to blind you from your trading. And if you get blinded from your trading, you have nothing. All you're doing is sitting there and hoping that you come out in the right direction, and you're going to end up losing over and over and over again. But that's what people do. They're going to see these emotions, and they're like, oh, this is so fun. I'm having the time of my life. I'm the best trader ever. And the next thing you know, you're ending up losing because you're letting emotions take over your trading, and that is not what you guys can have. So, going back to those keywords look for in hot press releases, look at these giant rips, look at these giant pops. This went on a straight rip, ALDX, and then came right back on down. Now, this is, again, a little bit overbought. There's also good credibility towards it, but as I said, you want to be in as early as possible. So ALDX went on a nasty rip, all the way from $8, shot all the way up to $18, and dropped all the way down towards around $10. NLNK. Oh, what? NLNK. Oh, NLNK, excuse me, thank you. NLNK, LDX actually the next one. Now, why did this come out? This was because of the plain fact it came out with one of these keywords right in the title of the press release. This is all you have to look at, because again, time, guys. Time is so quick, especially in day trading. And maybe that's why I have the habit of just talking so fast, because being a day trader and streaming every single day, time is money. It goes very, very quick. So what we have here, we demonstrate improvement of response rate in our advanced melanoma. Keyword right there, improvement. Right when people see that, they're immediately buying into that stock, pushing that stock on up, and that's when it goes on that extremely big time rip as we just saw right here. So big time press release comes out. You can also look a little bit more into these press releases as well. Look what the CEO is stating at the bottom. I know it's a little tough to read right now, but at the bottom it says, we are encouraged. That's the CEO coming on and stating in this press release, he's encouraged. He's looking great on the improvement of this data that we're seeing. Just when I see that right there, I really don't need to go through the rest of this. I know NLNK is a low float stock. I know that a lot of people are going to be pushing into this. The early birds, the early swing traders, as we said, right when that press release drops, they're going to be hopping in. They're going to be pushing that stock on up. Now what's going to happen? Now we're going to have the mob come in. Now that's 70%. Now that 80%. Now it's time for me to sell my profits. Right when the mob starts coming in, right when it starts getting overbought, that's when I'm locking in. Shorter's going to come in and dump it. And as I go back, guys, look how violent that went up, and then look how violent it went down. Straight on up, straight on down. Why? First off, again, those early bird traders got in, the breakout traders got in, then the rookies, then the novice traders. And as you guys could see, thrill, euphoria, baby, Olive Garden. And then it just absolutely dropped because people start getting scared then, letting emotions take on over. So that's what you guys really have to avoid. That's what you guys cannot get a hold of. Next on up, this one was talking about ALDX. ALDX, massive rip on up, massive rip on down. First things first, guys, what do we have? Positive phase 2 data. Positive phase 2 data. Again, I just always want to reinforce what I'm going over before, just so you guys can always see these. Keywords, again, they're so important, write them all down. Positive, 3-star word. Phase 2, 2-star word. So whenever you see more stars, the better. Personally, my favorite ones are primary endpoints being reached. Those are huge. That's why I have like 6 stars next to endpoints, just because it's the best. But positive, good. Phase 3 is good. Anything along these lines, you are going to be seeing massive, massive rips. And that's what I really just want to enforce, that these emotions, that traders are going to first, want to see where these people who know what they're going to be talking about pushing on up. But then, the traders that really don't know what's going to be going on, they are going to be coming up and buying, and that's the time that you guys want to sell. So what I really want to encourage today is just the pure fact that you guys do not want to be late. You guys don't want to chase. You guys have to be confident in yourself and be able to say to yourself, hey, you know what? I know what I'm supposed to do here. If I'm not first, then I'm probably going to be buying late and I'm going to be last. And it's all about studying those keywords, studying your chart patterns, understanding that if you miss a trade, there's no reason to chase it. Every day is new in the market, and that's one of the most beautiful things about the stock market, that every day is going to be new. Every day there's a new opportunity. Continuing on right here, STAF. STAF, this stock went from 85 cents, gapped all the way up to 110. But the moment it gapped up, what happened? It started coming back on down. But why did it gap up? Great press release again, saying they have transformed the $40 million refinancing, closes 2 new acquisitions. So a beautiful press release right there. The moment I see that STAF is a $2 million in float stock. You know, the stock can go on a beautiful rip, a beautiful pop. We also have, I know it's a little difficult to read as well, but the bottom right there, it says, you know, we are significantly are growing on a financial strength. All great keywords from the CEO himself. That's gonna bring in a lot of hype. That's gonna bring in a lot of attention. The moment you see this, hop in. The moment you see this, that you guys wanna go ahead and attack this, that's what you guys want. You guys don't wanna just be late. You guys just have to be confident in yourself. So I know I'm a pretty quick speaker. I get through things pretty quickly. So I am coming up to the end of my presentation. But before I end, I do just wanna say that everyone here right now, you guys can lock in $10,000 a month. You guys can make $1,000 a day. It really just comes down to learning and studying. And that's what I want you guys to understand. Education has no ceiling. Right now, I know a lot about the stock market. I know a lot what's going on in the market, but every single day, I'm gonna keep learning more. I've been in the market for the last 4 years, but 4 years from now, I'm gonna be on a new level. I'm gonna be a different beast, and that's what I'm super excited for. And that's what I want you guys to be aware of as well. So when we are talking right here, make sure that you guys understand that time is your biggest asset. You ask any successful trader, any successful entrepreneur, time is their biggest asset because it is something no matter what, we are never going to get back. We're always going to have to invest our time to get something out of our time. So make sure that you guys are investing your time every single day. Make sure you guys are working hard, and I wish you guys the best of success. Thank you. I'll take, can we? Yeah, we'll take like 2, 3 questions. All right, yeah.
I noticed the first one that you showed, CYCC.
Yeah.
It looks like you took it near the end of the day. How do you manage overnight risk?
Yeah, if we go back to this one, CYCC, again, the reason I got into that play was just on the pure fact of this indicator squeeze. So I got into CYCC back right here, right before it started squeezing, as the strong green day was coming up to that 50-day moving average. And with the volume, with the squeeze, I expected that we're going to see a lot of momentum the next day. So that's why I hopped in right before the day closed. And as you saw, that's where volume also came in, which also reinforced that we were going to be moving up the next day. How the stocks close are usually how they open up. So seeing that, I wasn't really fearing too much overnight. I was just saying, hey, you know what? Momentum's most likely going to carry over. Yep. Thank you.
But I really notice you're solely long biased.
Mm-hmm.
Do you have it in the back of your mind? Should a change come?
Yeah.
You need to really.
Mm-hmm. Well,
Repeat the question.
Yeah, I will. Again, for everyone at home, she was asking, I'm solely long biased on a lot of my trades. Now, am I going to be staying long biased, or why am I long biased? A lot of it is just me personally. I just like going long. Also, on top of that, guys, since I've been doing my small account challenge, I'm on a cash account, and you can only short on a margin account. I honestly don't have anything against going short on trades. It's just the pure fact that I've been going long. I've been successful when I'm long. So, if it's not broken, don't fix it. Yeah, buddy.
I'm also a member of your chat room, so thanks for taking on the short challenge and everything.
Oh, thank you.
I appreciate it. It's inspiring. I guess I was wondering, as an individual trader, what do you think would be some of the most essential skills to kind of master in the coming years? And are those evergreen skills, or do you see that there might be something new to kind of learn as the years go by?
Honestly, when it comes down to it, it's really just, don't try to do too much. It's really just stick to the basics. And that's where people are going to end up losing. When they start getting greedy, I like to call them like fantasy traders, as you know. When they start trying to do too much and they start trying to say, okay, you know what? I know some of the fundamentals, but let me try to do my own little shindig right here. And that's not what's going to help you. If you just honestly stick with the basic fundamentals, have discipline as a trader, that's when you're going to make the most profit. When people lose is when they start trying to say, hey, you know what? I'm starting to get comfortable on what I'm doing right now. Let me sit back and kind of just continue to do this and, try to do something that's completely out of the ordinary. I would honestly say, if you want to say what are the most important skills and most important interests, is one, learn the fundamentals. 2, stay consistent with your trading. If I take, let's say, 2 weeks off of trading and then hop back in on it, I really don't know what's going on. Every single day, is different, but it could be going off of previous day top gainers or previous day top losers. And you guys really have to, stay up to date with the market. So just, when I was learning, just stay involved. Turn on CNBC, watch what the top gainers are every single day. Just focus on, the overall market. As long as you're focused, stick to your rules, and, don't break those rules. You'll be successful. All right, thank you guys so much again.